Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Thursday, August 14th. After being down 0.7% following disappointing economic data, the S&P 500 climbed to a gain of 1.1% midday, but finished 0.6% higher. At its current level, the S&P 500 is facing a week-to-date loss of 0.3%. Receding oil and commodity prices helped quell fears that worse-than-expected July inflation would persist. The decline in crude and commodities was partially owed to strength in the dollar, which is beginning to look more attractive as foreign economies wane. Those trends helped bolster buying in equities. According to July data, the Consumer Price Index was up 5.6% year-over-year, thanks to higher food and energy costs. That was more than forecast and higher than June. Excluding food and energy, the CPI advanced 0.3% for July, which was also higher than expected. The increase in the core suggests higher import prices, and recent pressures on commodity prices have led to some cost-push inflation. However, the August CPI will probably be much better given the recent decline in oil and commodity prices. Those trends persisted as crude prices and commodity prices finished almost 1% lower after the dollar advanced roughly 0.6% against a basket of major foreign currencies this session. The dollar's recent strength is based on concerns related to slower growth in other major economies. Supporting that notion, Europe's economy contracted for the first time since the introduction of the euro almost 1 decade ago. Eurozone GDP fell 0.2% in the second quarter. The two largest sectors in the S&P 500, technology and financials, helped lift the major indices, as did a better-than-expected earnings report from Walmart, Urban Outfitters, and Estée Lauder. Their numbers helped retailers advance 2.1% collectively and provide evidence that consumers continue to spend despite looser labor markets. Initial jobless claims totaled 450,000 for the week ending August 9th. Though weekly claims fell 10,000, the 4-week moving average rose 19,000 to 440,500, which reflects deterioration in the labor market. I'm Jeffrey Ham for Briefing.com. Thanks for listening and have a great evening.